Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Mara Goldstein, Managing Director with Mizuho Americas, to discuss investing in oncology-focused companies. Mara, it's great to have you with us. Welcome to Trade Talks.
Great, thanks so much.
What are important considerations such as risk and capital needs investors need to be aware of when investing in this space?
Sure. Oncology companies, like many development stage companies, do carry risk. And so one of the most important things we look at is to assess the overall risk of what we think the company is working on the stage of development and what their capital needs will be to bring that candidate through each one of those stages of development. Typically, when an oncology company, and any development stage company for that matter, has a clinical success, it represents an opportunity to do capital raising, having validated their candidate in an earlier stage trial. So we want to look at that. We want to be able to assess the likelihood of being able to have enough capital to bring a program to its next milestone and the ability to capital raise based on that.
What are oncology drug development risk compared to other biotech subsectors and returns?
Sure. When you look at risk, there are riskier areas from a development perspective. We would put oncology drugs, on par with some of the rare diseases, things like that. These are companies, these are technologies that are, a lot of them, just being validated now. They're new targets, they're novel, so they do tend to carry a higher degree of risk. Globally, when you look at overall success rates, for drug development, it tends to be on a global basis in the single digits. But when you really start to isolate out commercial companies out there, they range anywhere from 15 to 50%, and oncology companies are probably in that sort of 15 to 20% space.
What technologies and trends are you watching that can accelerate drug development and find new targets?
Sure. There's been just a ton of development work that's gone on, and a ton of innovation. So there's lots of new technologies that look at the ability to find new targets, right? And so that's a big benefit to people who have cancers that are being driven by, increasingly rare types of mutations. So the ability to be able to find those mutations, to be able to really map them, and then to be able to design a drug for that, that's particularly huge. One of the most interesting things that we think has come out of COVID is really the acceleration of RNA-based vaccines, and the idea that you can then be able to use that in other areas of drug development. We're seeing a little bit of work on the oncology space, but it certainly could open up not just new opportunities for treatment, but also accelerate development, which is a pretty big deal.
Yeah. Anything interesting in the pipeline that you're looking at?
Sure. There's a lot of really interesting targets out there. There's a novel target in the immuno-oncology space called TIGIT, or anti-TIGIT drugs. These are drugs that would be combined with checkpoint inhibitors, which have really revolutionized treatment for certain types of cancers. These drugs collectively are about a $20 billion industry today. Merck is the leader in this. Bristol Myers Squibb has a drug, Roche. And so these are drugs that would be used in combination with that. We're also really interested in cellular therapy. So these are treatments where you take essentially human cells and you manipulate them and tell them to, do something in your body, go after a particular cancer cell. We're really interested in the NK cell, or natural killer cells. We think that is a pretty interesting area for development.
How do you determine what the critical success factors are for development stage biotech companies?
Sure. We want to look at things like, how novel is the target, but also the biological rationale and the scientific data behind it. So that's really important. Also, management teams that have experience bringing drugs through clinical trials, really being able to look at data in an objective fashion. And the other piece of it is, not surprisingly, cash. How much cash do these companies have? So how much then they invest, and how closely do they have to cut corners to get to their next data point? Those are all really important things.
Yeah, and the M&A market has been somewhat muted because of the volatility in the market to kick off 2022. Anything exciting that you're seeing in M&A within the biotech space?
Well, we just saw something interesting, actually, and that was Regeneron Pharmaceuticals, which is a larger cap biotech company, did its first corporate acquisition of a company called Checkmate Pharmaceuticals. And this is a company that has a novel immuno-oncology drug in development. But I think what's interesting is that you're seeing, companies that are not normally the acquirers that we're thinking potentially step into the market. There's been a lot said about the sheer number of biotech companies trading with negative enterprise value values, which should tell you sort of the appetite right now for the broader investing market and whether or not that really does represent some interesting opportunities. It's not surprising when a company has a clinical failure to see, the stock price go down, the enterprise value go down. But we have a lot of companies right now that are trading below enterprise value without having experienced any of those clinical failures yet.
And Mara, when we think of M&A in other sectors, it's typically to, rather than having to grow organically, to acquire growth via acquisition. Is it the same way in the biotech space, rather than having to go and farm out new teams and the new technology and so forth, to kind of acquire and find those synergies within the existing technology?
So it's less about, right, it's less about that horizontal strategy, because for the most part, most of the M&A activity occurs around a particular development candidate or a particular technology. But the way to think about it is, like, if you think about a bigger company like a Merck or a Bristol Myers Squibb, their pipelines is essentially potential commercial opportunities. It's the opportunity to add in that. And I think there's a really important statistic, and this is what makes, market conditions aside, this is what makes the group interesting, is that if you look broadly speaking within pharmaceutical commercialization, the number of drugs that had lineage that started at a small biotech that have made it to actual commercial products is about 65% of drugs today. And that's up from about 15% 12 years ago. So the ability for the pharmaceutical industry to supplement its pipeline, to bring technologies and potentially products to market by tapping into these, essentially a cottage industry within biotech, is a huge opportunity. It just happens to come, unfortunately, in waves, and we're at a low point right now.
Any top picks in the sector?
Sure. A name that we really like a lot is a company called Arcus. RCUS is the ticker, Arcus Biosciences. They have a huge pipeline. They have a multi-candidate deal with Gilead. They have very little cash risk, with over $1 billion in cash. And on top of the deal that they have with Gilead, they have a pipeline of candidates behind it. So when we talk about critical success factors, validated targets, good management, partners, cash risk, we think Arcus really checks the box.
All right, Mara, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.